What's going on, motherfuckers? Throwing together a video for the extended weekend. Everything looks great. Everything looks absolutely fucking perfect. The market is very, very bullish. AMC is setting up very nicely up against the macro resistance currently. The other meme stocks look great. GameStop looks amazing. Blue chips, crypto, all of it. Everything looks fucking great market wide. With that being said, and I'm going to say this now before I get into the video, but I'm going to show a couple different scenarios for AMC. We are meeting our macro resistance line this week coming up. It is possible that we have intraday chop bullshit days like we've been seeing for the past 4 months every day this week until Friday. After Friday, we'll be sitting pretty much on top of our macro resistance. So I'll go over the scenarios when I get into the video. So let's just jump into it, and we're going to start with SPY. So SPY pretty much got the day I was looking for Friday, pulling back pretty drastic. 473, I believe, was the low. 473.30, and then bouncing, closing roughly 475 again. This looks great. SPY is going to be seeing new all-time highs very, very soon. As a matter of fact, the pullback from the local high here bounced right on top of support. The previous resistance that we were fighting to break out of here, I believe that level is 473. Trying to break 473, we did, and now testing on top of it. That was the final resistance point before all-time highs, and now we broke out of it and retested. It is time to see all-time highs on S&P 500. Now, it is possible that we do consolidate here the entire week, which I think is kind of unlikely. I'm just mentioning it because it's a possibility where we could just play ping pong here, testing this range all week, and then the following week we would get the move up. It's also possible that SPY just gaps up on Tuesday. Regardless of the case, S&P 500 will be seeing new all-time highs very, very soon. So I believe the local high here was 477.60, and all-time highs are 479.97. So roughly $2 away from all-time highs. This looks amazing. Absolutely fucking perfect. Perfectly symmetrical bottoming formation here that I tracked since the beginning of 2023 until recently. The symmetry broke on the break of 460. Now we are pushing towards all-time highs. This looks absolutely perfect. Along with that, I mentioned multiple times that SPY saw all-time highs in January of 2022, and it's lining up for all-time highs in January of 2024. January, the first trading day of January is the first day next week of trading, which is Tuesday. So it's time. It's time to see markups around the market. So that is pretty much it for SPY. Oh, one other thing that I've been mentioning for a very long time, that SPY seeing all-time highs more than likely would be simultaneous with the meme basket squeezing again, and it still looks like the case. So that's it for SPY. All-time highs coming very, very soon here. Now, really quickly, because this was posted in the Discord over the weekend, yesterday and today. So this is the monthly chart on SPY. This looks fucking amazing. Absolutely fucking amazing. This was the all-time high candle of 2022 here. Pretty much followed by a bearish engulfing. Not quite a bearish engulfing, but close. This was the descending broadening wedge. And then not quite a bullish engulfing, but pretty close again. And now sitting right at that all-time high level. When this breaks, there's going to be momentum to the upside, and probably a big surge in volume as well. MOAS. So that's pretty cool. So we can move on from that and just really quickly take a look at NASDAQ, because NASDAQ is already at all-time highs, actually formed new all-time highs and pulled back with the rest of the market on Friday. Friday was pretty bloody all around. Pulled back to test on the break of all-time highs. So that's NASDAQ. Looks very, very good. Dow Jones, same thing. It already did test it, broke all-time highs, tested it, bounced off. Dow is going to continue climbing. This looks great. All the indices. Russell 2000, IWM, broke out of this parallel channel that it's been trading in for almost 2 years. Broke out of it, and along with the rest of the market on Friday, pulled back, retesting the break of $200. I believe the local high here was 205 and change. and now retesting the breakout at $200. When this confirms, which it will, Russell 2000, along with small caps are going to start seeing some momentum to the upside. This will start climbing towards all-time highs and past all-time highs. Bull market. Everything looks fucking amazing. So that's the indices. If they aren't at all-time highs currently, they're very, very close, and we'll be seeing them very soon. Now, getting into AMC's macro. Most of this is going to be repetitive shit. I cover AMC, going over the macro, the bull phase and bear phase of AMC. Every video, it's a macro perspective. It's never going to change. But it doesn't mean that I'm not going to cover it still. So we'll start with the macro, which you have a bull cycle, a bear cycle, a bull cycle, and a bear cycle. So both of the bull cycles were January and June equivalent peaks in the green and yellow that you see here, your January and June equivalent in the yellow, your V-shape, and then your macro break, which is the gap down into the downtrend. So you get this little pattern of consolidation sideways on both sides, and then you fall off a cliff into your downtrend, and then you go through the bear phase of AMC. So getting into the bear phase of AMC now, and here it is with the 200 EMA in yellow. So there's your macro break gap down in the blue box, your sideways consolidation pattern right there, and then knifing into the downtrend on both sides. So your first bottom, climbing your way back up to your rejection point. This is your macro resistance point, your first touch right there. And in the current cycle, same thing. Your first bottom, climbing your way back up to macro resistance, your first touch, first rejection point. Second bottom, second rejection point, second bottom, second rejection point. And then from that second rejection point, you break below the 200 EMA on both sides, and you do not find it, you don't touch it until the flat portion, where you get this 3 peak move that you see here, which pokes above the 200 EMA on both sides. From there, it pulls back underneath, and then you get the W, which brings you to the fake out move, which is the pump past macro resistance. It's a fake out. Your third touch on macro resistance, and then dropping down to play out the rest of the flat portion for your fourth touch, which is the breakout, and with that, straight line volatility to the upside, which is what we're looking for. And the price targets of this upcoming squeeze will be higher than what we saw in the bull cycle of AMC in 2021. And speaking of that, January always fucking has been. So the previous bull cycle of AMC started in January of 2021. The current bull cycle of AMC is going to start in January of 2024, approaching our fourth touch on macro resistance, looking for a breakout, looking for a new bull cycle, i.e. a squeeze. January always fucking has been. And it's next week. Next Tuesday, January 2nd, is the first trading day in January, and it's looking like it's fucking bull season all around. Cannot be denied. Indices, if they're not at all-time highs already, they're very close. Just market-wide. Blue chips, crypto, it cannot be denied. Everything is uptrending for the most part right now. It's bull season. It's time for some moves up. And with AMC, it's going to be very drastic because we're just being pinched down here. A lot of other tickers have already started uptrending. It's just a part of their macro. That's the way their macros are. AMC's macro, 99.9% of the time, is this downtrend. Just downtrending, lower highs and lower lows all the way through until this point. And this final point here, this final bottom, is the lowest point throughout the entire bear cycle. This is your all-time low landmark for AMC. It's how AMC's macro ends, with an all-time low landmark. And in the current cycle, it's the same story. Lower highs and lower lows all the way down here to our all-time low landmark, which we recently bottomed at 593, our spring, and now we are uptrending into the macro resistance. That's how the macro of AMC ends, with an all-time low landmark. And the bull cycle of AMC is explosive, along with GameStop and other meme stocks. Their bull cycles are straight lines, vertical lines, which is why we're here. So that's the bear cycle of AMC. Now let's get into the halt line itself. Here it is. So this is a 24-hour chart. So pretty much a daily, but the candles have extended hours. That's what I've been using for the macro resistance. You could use it on the daily, 24-hour, 4-hour, weekly, monthly, whatever. It doesn't make a difference. It's the same trend line. So here it is, your first rejection point here, our second rejection point halting both times, our third rejection point, the fake out halting, and dropping down for the flat portion, very, very flat. Completely flatlined here and approaching resistance again. We're meeting it this Friday. This is the last week of price action for AMC before we meet this macro resistance. Now we can go flat here until Friday, intraday. Friday's close will have us sitting right under the resistance. We'll be right up against it this Friday, January 5th. And like I mentioned, throughout this downtrend, very, very low volume all throughout this. Very big swings, very low volume until where we are now. Not very big swings, very flat and very high volume, transitioning into a new macro. So a perfect setup here is pretty much the point. And with that being said, zero is right underneath us. There's two ways that this plays out. Number one, we break the resistance and squeeze. And number two, we reject it and we go to zero. Now, I don't see a world AMC going to zero. It does not make sense fundamentally. And it would have to happen now. This would have to happen in January. AMC would have to go to zero in January, which just doesn't even make sense. So with that being said, we're going to be looking for a new bull cycle, i.e. a squeeze. You know, it's just AMC's macro. The downtrend, it's just a shitty macro, but you know, it is, practically speaking, it's a sound macro as well. So it looks good. Is pretty much the point. Just zooming into the halt line, here it is. So here is the flat portion that we're currently going through, the accumulation here. Here was the spring breaking below support level at 650, poking our head on it this Thursday, and Friday we got a pullback. The entire market was bloody on Friday. Everything pulled back. I was calling for a pullback on SPY anyway, and GameStop. I don't know why I thought that AMC might be green. But regardless, it formed a higher low here. A very nice bounce off that higher low as well. And it's still maintaining the uptrend. So far, so good. And like I said, we can go dead flat here this entire week. So Tuesday, Wednesday, Thursday. By Friday, if we're anywhere in this range, we're going to be sitting right up against the resistance. And that could be sooner. And I'm going to go into a scenario where that actually is sooner. But this looks very good. Really what we're looking for here is to reclaim 650 support, but it's possible we don't even have to. I'll talk about that in a little bit as well. So that's zoomed in, and I got really good feedback on the bar replay because, I mean, it kind of tells the story for you, so I figured I would do it again. The bar replay of AMC's downtrend, watching all of these, just 3 years of just pain and exhaustion of retail, watching it play out, it paints the story watching the price action. So here we go again with the bars replay. So here's your macro break dropping down into the downtrend. Pay attention to the downside of this too. Very slow, just exhausting retail, and then boom, alt, first touch. Very slow, choppy, boring price action, just exhausting retail. 3 years straight. Boom, number two, halt again. The ups, instant, very volatile, very fast. The downside, just exhausting retail. Flat portion, there you go, your tri-peak. Second bottom, the smaller tri-peak now. Coming up on our spring. Look how slow this price action is. Spring, boom, July, halted. Third touch. Coming down to the flat portion again, and here we are, just completely flatlined, approaching macro resistance, pretty much sitting right on it. It paints a very nice story, watching the candles behave near resistance and watching them behave in the downtrend. So it looks great. There's no complaints here. It looks amazing. So that's that. Now, that was looking at AMC fractally. Now, let's look at this from a Wyckoff standpoint really quick, and I'm going to go over a few things here. So we'll start with this. So this is looking at the flat portion that we're currently going through, our all-time lows here on the right, and then this is just a template of Wyckoff accumulation on the left. So again, everything's marked here: preliminary supply, selling climax, automatic rally, sell test, and then your push for resistance, which is the bigger tri-peak. And this applies to all of the flat portions that we've played out, by the way, and I'm going to show that. But the push for the resistance coming down to a lower low, and then your smaller tri-peak, which theoretically should have bounced up to the automatic rally at $9 roughly, but because of how pinched down we are in the macro, our macro resistance, that was not going to happen. So your smaller tri-peak, your spring, and now we are coming off of our spring, hit our head on support on Thursday, and then Friday pulled back with the rest of the market. So if we're looking at this from a Wyckoff standpoint, really all we have to do here is reclaim support, and then we mark up, and then we're looking for upside. Now it's possible that we don't even have to reclaim support here, and I'm going to show you why. But before I do that, what I was just saying, where we're playing out another flat portion here. So the same flat portion that played out leading up to 2021. The January squeeze was the same flat portion that played out from 2023 until the July after hours gap up, is the same flat portion that we're playing out again, approaching macro resistance in the exact same way. So I just went over the side-by-side Wyckoff accumulation template and the flat portion that we're currently going through. But let's look at the other ones. So this was the flat portion of January 2020 to January 2021, right before we squeezed. So it's all the same. Everything's marked. Preliminary supply, selling climax, automatic rally, sell test, same on both sides. And then your push for resistance, which is your bigger tri-peak move in the middle. So your bigger tri-peak move in the middle, and then you come down. In this flat portion, the second bottom did not break below the selling climax, but it was close. So your second bottom, this tri-peak was also higher because of the macro resistance. It wasn't the same in the previous cycle, but your tri-peak now, your tri-peak, your spring is your all-time low landmark. That we got the all-time low landmark, broke below the range. Your spring there, your spring here, and now we're in the middle of the uptrend to reclaim support. Really, like I said, all we have to do is break the resistance of the smaller tri-peak, this line here. So you break that, you test, and then that's it. Gap up, straight line. That's what we're looking for. And our macro resistance is here in red. We're approaching it. So this is the 2020 to 2021 flat portion compared to the current one. Now let's look at the July flat portion compared to the current one. So again, preliminary supply, selling climax, automatic rally, sell test. Then your push for resistance here, your tri-peak, the bigger tri-peak move. Then dropping down to your second bottom, which breaks below the selling climax on both sides. And then again, your tri-peak, the smaller one now, which should have theoretically bounced up to the automatic rally, but it didn't in July either. It didn't make it. And then over here, it's even more coiled down, even more pinched down because of the macro resistance. But nonetheless, here's your tri-peak, and then coming down on the right side of that is your spring. Now this, we were looking for a new all-time low here at the time. We were looking for this third bottom to be a lower low than the previous two, but it never happened. This was a pre-market wick down, but still serves as the spring here, from which you bounce out of, you break the resistance here, you retest it, and then boom, July. After hours move, 100% gap up in 1 minute, and then halting on Monday to pull us back in to the macro resistance. So I'm just showing, I showed it fractally, I showed it with the macro resistance, and now I'm showing it with Wyckoff. It's all the same. The flat portion that we're playing out right now is the exact same flat portion that we played out leading up to July when we met the resistance, and it's the same flat portion that we played out leading up to the macro resistance in 2021 when we squeezed. Now, the point that I'm trying to make here is we're either going to break this resistance and squeeze, or we're not, and we're going to go to zero. Those are the only two options. So, I mean, place your bets. It's very simple. The stock, it would have to go to zero this month. If you can make a case for AMC going to zero this month, I would love to hear it. So, you know, just simple logic here. If we're not going to zero, we're squeezing. Price target $1,400. And then this was just looking at it again fractally, the July move here, the July flat portion versus the current one. So first bottom, bigger tri-peak in the middle, marked by the yellow. Second bottom, slightly lower than the first. Second bottom, slightly lower than the first. The smaller tri-peak now, the smaller tri-peak, and our spring is at the green arrow. from which you break the resistance of the tri-peak, you retest, and your fractal break is right there, the gap up. And that's what we're looking for over here, except this time, when we get our fractal break, it's going to be the same that we saw in July, a straight line volatility, except it's not going to stop. It's not pulling back, it's not retesting. We break this macro resistance, we are flying to the upside and heading for my price target. All right, so that's that. Indicators really quick. So here is the weekly on the logarithmic chart up top. We did have a green week, which is very, very good news for us. This is what we wanted to see, the all-time low landmark, and now coming off of that, a green week. Volume staying at all-time high levels, of course. OBV finding a bounce, retesting the macro resistance, not the macro resistance, the descending resistance of the OBV. Retested again for the third time, bounced off, and RSI on the weekly is still sitting at 29, oversold pretty much for the past, I don't know, 5 or 6 months. So that's that. Now, I mentioned that there was another scenario for AMC. So really quickly, I want to talk about that. And before I do this, I'm not claiming this to be fact. I'm not, I'm just showing something. I'm just showing it to show it. So if we're looking at the macro resistance of AMC, on the 4-hour chart, so obviously on different time frames, it's going to be skewed slightly. So before I show this, let me just say this. If you're looking at it on the monthly, we're meeting it this month. And by the way, this monthly candle's range was the smallest range of a monthly candle that we have seen on AMC ever. Roughly $1.50 was the range of this monthly candle, the smallest range that we've seen. So on the monthly chart, on the weekly chart, we're meeting it this week. On the 24-hour chart or the daily, we're meeting it this Friday. But if you use the 4-hour chart and you run the macro resistance, I'm just pointing this out. So I'm running it the exact same way I would on the daily. Now, like I said, on the 24-hour or the daily, we're meeting the macro resistance this Friday, January 5th. When you run it on the 4-hour chart, this is when we're meeting it. So, the first touch point here, the second touch point, halting both times, the third touch point, the fake out, running it to the top wick here. Friday's price action would have pretty much took us right up against the resistance. Pretty much this pullback, the resistance of this pullback is the macro resistance, is what the 4-hour is saying. Now, I want to also mention something else. So I previously said all we have to do, fractally speaking, is, let me just get to it first. Fractally speaking, all we have to do to complete the iteration that we're going through right now, the flat portion, is break the resistance of the smaller tri-peak, break it and retest it. And then after that, fractal break. Now, looking at this with the macro resistance, it doesn't even make sense, because if we were to break this, we would already just be sitting at macro resistance. So it would just straight line. There's another way to look at this, and this is looking at it with the resistance that we've been fighting for the past 4 months. Our first and second rejection point, the middle tri-peak move, the retest here failed on earnings, and then we broke below it. And this is the resistance that we've been fighting this whole entire time, even to the spring, bounced up resistance. There you have it, a breakout and a retest here, and sitting right up against the macro resistance. So if you're looking at it like this, we actually did already break the resistance of the smaller tri-peak and retest it in descending fashion, exactly how we saw in the previous iteration here. So after the spring, you break out and it's a descending retest, and then it just fractal break, gap up. There is the breakout and a descending retest. And looking at it on the 4-hour, we're sitting right up against the macro resistance. I'm not saying that we have to gap up on Tuesday. That's not what I'm saying. I'm just saying on the 4-hour, running the macro resistance line, we're meeting it Tuesday. On the 24, the daily, we're meeting it Friday. On the weekly, we're meeting it this week. And on the monthly, we're meeting it this month. So January always has been is the point. That's the point I'm getting at here. January always has been. We're about to see madness in the market. Everything looks fucking amazing. So With that being said, hope you guys enjoy the rest of your weekend. Happy New Year's to everyone. Let's fucking kick this New Year's off right. Let's kick this shit off with a squeeze. And with that being said, I'll catch you guys with some updates and hopefully some fucking lives next week. That would be amazing. So I will catch you guys next week.